Welcome back, everybody. I'm Chad Shoop. Happy Monday. Today we're kicking things off with a brand new edition of my Bank It or Tank It. This week we're going to be looking at 5 stocks that happen to be on my Bank It list. But if you've been following me on Twitter, I've been pretty bearish here over the last several months. Really, just since the Fed's really gone aggressive, I've been more bearish on the market, and they haven't changed that tune yet. We do have a big Fed meeting coming up here in just another week or so. So we're going to be keeping all eyes on the Fed here throughout September. But, on top of me being just ultimately overall bearish, I'm still bullish on some stocks, and I still follow my same Bank It or Tank It analysis across the board on looking at companies that are holding key levels, showing some nice uptrends, and looking for opportunities in those. So today I got 5 stocks that we're going to run through real quick. But first, scroll below, like and subscribe. Make sure you like the YouTube channel. Make sure you leave me a comment. Let me know what stocks you want me to feature in an upcoming Bank It or Tank It video, or another segment like this that we're going to continue to do these YouTube videos. So keep those comments coming in so we have more stocks that we can talk about that are going to be relevant to what you are looking at in the market. It could be anything from large cap to small cap stocks. Just throw it out there and we'll be sure to feature it in an upcoming video. And before we get into everything today, look, I have a brand new report out just for you all. It's my bear market guide to thrive here, inflation edition. So it's stylized around this current market environment that we have, but it's all about how to navigate a bear market and how you come out of this on top, because at the end of the day, we are in a bear market. It's going to act a lot different than it has been here while we were in a bull market for over a decade. This current environment that we're in is defined as a bear market, and I don't think it's going to be over anytime soon. So we put this report up. You can click the link up here to check it out. It's a free report. Just click it, sign up, so that way you can get the email and we'll send it right to you. And you can take a look at this report at no cost to you or anything else. You just take a look at it, read through it. I put a lot of hard work into this thing, and I really just wanted to share it with you because I think it's a perfect time to kind of get this idea out there that we are in a bear market, and we need to admit about that it's not time to go all in just yet. This is a volatile market. If you're going to go bullish, follow the steps like we're going to lay out today in this Bank It or Tank It video. So let's dive in. Our first stock is Liberty Media Corp. So this is basically Formula One. This is their stock. Liberty Media is the parent company that owns them. FWONK is the ticker. And you can see we have this ascending triangle pattern up here with a red resistance, a rising green support. And the stock's kind of bouncing around. I mean, this support goes back down here almost to 2020, into 2020, but almost to the lows. It's a nice trend line to the upside. And now we got a little bit of resistance on the top. So we want to see which one of these channels hold. I'm turning bullish on the stock. It didn't quite get into the lagging quadrant yet. We follow this on my relative rotation graph patterns that we look at, and green is leading, yellow is weakening, and then the next phase is usually lagging, which would signal it could come down and test this level. And sometimes they go right back into leading and they can continue to move higher. So that's something that we'll keep an eye on. If it goes into lagging, then I wouldn't buy it just yet. I would look for it to drift down a little bit more, and you might be able to scoop it back up here under $64 a share, around 63 or so on a pullback. So that's something to keep in mind. But today, this stock is on my Bank It list. It's in a nice uptrend. Got the ascending triangle pattern, which are typically breakout patterns, and the height of this one you would take from about 70 down to $56, $57 a share. So you're talking $13, $14 a share that you would expect on the breakout. It's going to be a bigger than a 10% move here once this channel breaks either way. So you can follow this on the downside too. If you start to see it break out below this, you can expect a quick drop here, down another 13 or 14 bucks from the price level that it breaks out at. So that's how you can play this on both sides here in the volatile market. But right now, I'm going to stay bullish. We are trending down here around the bottom of this chart, and I think we'll get a breakout to the upside. Our next stock, Eastman Chemical Company. This is a downward price channel, falling wedge pattern here with the green support sloping down, red resistance sloping down. What I'm watching on the short term, though, when we look at this stock, we have the leading quadrant, weakening quadrant, into the lagging quadrant here, and we're starting to move out of that to the upside. So that's great to see. You always want to see a stock move higher through this lagging quadrant and the improving quadrant, which would be blue, that would come next. So we're looking for that to move higher, but I also think that across the bottom right here, we could be forming a short-term support that we want to keep an eye on. So we'll make this dotted line. This is just something that we want to pay attention to. And that's really the reason that it's on my Bank It list for today. I do expect it to go higher because I'm watching this level. And if it breaks below this level for this stock, then I would get out because it could run down here and start following this major support to the downside. We don't want to get stuck up in that. So follow this tighter support line right here. That's what we're going to be looking at to keep us in the stock and look for it to break out to the upside. Now, another stock we have today is Enos. And Enos just produces like folders and forms and tags and that sort of thing for corporate offices. So not an exciting industry by any means, but they've cornered the market. They have a broad market share. They believe they're the largest company in this industry. And when you look at the stock, I mean, I have to zoom out just to show you this trend all the way back to the last bear market that we had. It was 2008, 2009. The global financial crisis saw the stock crater back down to the ultimate lows that it hit. This was the dot-com bubble, so you can see that the two bubbles have taken the stock much, much lower than it is today. So it could end up going much lower if we are in another big crisis like that, like 2008, like 2009. Now, this is kind of a plan if we're not in that crisis. This is a very stable stock. As I mentioned, this goes back to 2008. Just the resistance level and support level have held that long, showing that there's this nice upward price channel. So even though there is downside of risk on this one, we're going to keep it right here at the top. That's the only reason I'm really looking at this stock today. It's because of this area right here that we're going to be watching for a major support. And the reason why I'm watching this is because we had the big breakout to the upside. Little consolidation here, then a breakout. Now we went up, trying to test the resistance levels up here around the top, and then pulling back down. So this stock also just made a new 52-week high. That's great. Now it's getting a little bit of a pullback, and if this is just a retest of this area, then I'm excited about the stock. I'll stay bullish on it. We're going to have it on our bank list today, but if it falls below like $20 a share, then we'll get out of this one as well. This is how we navigate a turbulent market with our key levels in our bank it or tank it analysis. And you can see it's in the leading quadrant now. Just turned yellow, so it's weakening a little bit. It's going to test this level. I think it's going to flirt right around here, but ultimately, as long as this holds, I want it on my bank it list for today. Now, another stock we're going to look at is VUZI. Now, this is an augmented reality company. Very exciting stuff. So we go from boring, very boring industry that's been stable, holding up, trading near the highs after this pullback that we've seen in the market, and then an exciting stock like VUZI in the augmented reality smart glasses industry that I think are going to take off. I mean, these things are definitely next level heads-up technology that's going to take off at some point. It could be years down the road, and that's why maybe they're early. When you're looking at the stock from the peak in 2021 with all the tech stocks, and then you see this thing roll over, it's got this strong resistance line. But then when you see these run-ups, I mean, it gets beaten down. I mean, and then the stock doubles in a matter of weeks. Beaten down, the stock doubles in a matter of weeks, pretty much. So now we're trying to hold that. It's in the lagging quadrant, so I think that we could be trying to make a turn higher here. And if we can break out of this resistance, then we're starting to create an uptrend in the stock and continue to move higher. So that's kind of the thesis behind this trade. That's what I'm watching for when it comes to VUZI. I'm really I'm cheering for the stock. This is a company that I like, that I'm going to keep on my list. And as it goes lower, it'll be a stock that I continue to look at for buying opportunities on the way down. But I'm not trying to hold it all the way down. So this one, just this turn up higher here that we're seeing, I don't want it to come back down and test this. So below $7 a share, then it's time to get out and reassess the stock, and then we'll look for another opportunity to jump in. But for today, it's above $7 a share. We'll add it on our bank it list and look for it to run higher from here. And then last but not least, ATEN Networks. It's a leading cybersecurity stock that's holding up pretty well here in the volatile market. It did just get a pullback. This is the main reason that it ended up on my bank it list today. We went through the motions. We're just going back to the last cycle here through the rotations. Lagging quadrant down here near the bottom, near the support level, into improving, then into leading, and then from leading went to weakening, saw a sharp drop, fell in the lagging quadrant, and now it's starting to hold up in the lagging quadrant. So I'm looking for it to make another move higher here, run back up to $16 a share, and eventually break out. I mean, a bank it stock from now to 16 is not the type of moves that I'm looking for. But this thing is creating this nice consolidation channel up here after it's been moving higher since the 2020 lows. A nice climb higher. Now we're consolidating in a broad channel. We're looking for it to break out of that. We're going to have it on our bank it list today. And again, we have a clear, concise angle here to the downside, 1275. If it's below that, we want out of the stock. Above that, we want to stay bullish and keep it on our bank it list. So that's all I have for today. 5 stocks to put on your bank it list. Don't forget to check out our free report. Don't forget to leave me a comment below, like and subscribe to the channel, and just continue to let me know what stocks you want me to feature in these upcoming videos. So that's all for this week. Until next time, I'm Chad Shoup.